How do you know if a trend is strong enough to trade? But how do you know if it's not trending? And then you can position for a breakout. These are pretty important things to know, and I'm going to get to that. But I'm going to ask you to hit the subscribe button first. And that like button, it's pretty important. So we know that if you like this content or not, and really what you want to see more of. So when talking about trend strength, using the ADX indicator, it's a pretty objective way to measure the strength of the trend, the momentum of the trend. So a trader that may have a pullback reversal strategy and a breakout strategy, they're going to find this useful in knowing the strength or weakness of the current trend, because the ADX is going to let you know if you should be using a trading strategy that trades pullbacks, right? That needs a trending environment, or a breakout strategy that needs more of a consolidation of price. And the ADX is a pretty decent tool that you can use to really quickly determine what kind of strategy you should be using in the market. So some quick background on the ADX. Wells Wilder, he invented it to identify periods of trending price action. Now, the calculation of the indicator, it's based on changes in consecutive bar highs, consecutive lows. And these values are then smoothed, and then you get the ADX. Now, traditionally, an ADX value above 20, 25 indicates a trending market. Now, the exact threshold of what you're going to use, it can change. Some people use 21, 22, 23, 25, 30. Just pick one, right? Anything below those values to you will indicate that the market is not really trending. It's possibly consolidating. Now, keep in mind, the ADX does not indicate the direction of the trend. Okay, it just simply tells us the market is trending either strong or it's weak. How do you read it? You can set it to 14 periods, 20 periods. 0 to 20 is considered weak or a non-existent trend. From 21 to 49, we would look at that as a market that's trending. And then we'd be looking to take trend trades like reversals out of pullbacks. 50 to 74, that's a strong trend. Okay, this is where you'd be looking to lock in some profits or at least start reducing your risk. 75 to 100, extremely strong trend. And traders should be on alert for sudden price shocks against their position. And also, just consider if the ADX is rising, because that just shows that the current trend is beginning to get strong or is already strong. If it's falling, the current trend is getting weak. Now, you're going to have to determine trend direction some other way. You can use price action, 20 EMA, 20 SMA, 50, whatever you want to use, moving average. Now, there are two main ways that we can use the ADX as part of a trading strategy. But first, you got to know how you trade. Do you day trade? Do you swing trade? Are your time frames the weekly charts? After that, what's your approach to trading? Trend traders are looking for continuation trades through pullbacks or small little breakouts. They would scan the markets that read over 20 with a rising or a sideways line. Now, traders who look to trade breakouts from a range or look to be in the market before the trend moves above, you would look for reading about 25, less than that. We're going to talk about that in these strategies here. So this is the breakout trading. So this is a daily price chart. It's a pretty good example of a breakout play with the ADX. So we're scanning our stocks and we find the indicator shows a weak or a non-existent trend, right? It's a range condition. And in doing so, we look for a consolidation structure for breakout trading. So as price begins a pattern of lower highs and lower lows at number 1, we actually see the ADX sloping down and heading under the 20 level. Now, this is your sign that any trend that may be present is weak. The line at number 2 is the previous swing high, and we see a fair amount of price action without clear direction underneath it. Number 3, this is important. Price moves close to the resistance level, but unlike the other times, price actually forms a small trading range near the highs. This is bullish. At number 4, we see a rising ADX followed by a strong breakout. The ADX just continues to rise over the 20 line, showing us a strong uptrend is forming. Now let's talk about pullbacks. When you're trading continuation trades, we want to make sure that the market we're considering has some energy to it. So we scan our charts, we look for ADX plus 20. When we do that, we can now dig deeper into the chart with some technical analysis. So remember, a rising line indicates a strengthening trend. A falling ADX equals a weakening trend. To determine trend direction here, we're going to use a 20-period EMA for a directional indicator, okay? This is a daily chart of Peabody Energy. The 20-period moving average shows us an overall uptrend. Look at that, price is broken out over a previous high. It's pulled back to the breakout point. We see the rising ADX showing momentum is coming into the instrument. Over 20, this is a viable long trade. Further there on the right, we actually have a complex pullback and a declining ADX, which, in fairness, we could expect to see that when we're looking at a two-legged pullback. The trend's still strong because it's over our 20 level, but it's losing a bit of steam as price moves into the previous high. So if you're long and it's heading into resistance with a declining ADX, you may want to manage your stop just in case of a strong rejection to the downside. Now, if you need to see a rising or a flat ADX and a reading over 20, that is a good way to narrow down your watch list of potential trades for pullbacks. Now, trend strength. It's also a scan that traders can use just to narrow down their focus list. Now, you can see the same thing when you look at price action, but the ADX is a fast and dirty way to scan through your charts quickly to find where your focus should be. So if you're a trend trader, let's look for the ADX over 20. If you prefer breakout trades, look for an ADX less than 20. So an example would be a Forex trader. Maybe they're looking for a currency pair to trade. You could just compare the ADX readings. Which currency pair is strongest when comparing USD crosses, for example. The best setting, as with most indicators, right? You can adjust certain settings. You can adjust the look back period or the levels you need to see to show a strong trend when we're talking about the ADX. Generally 14 or 20 for the ADX. That's the standard look back. Shorter periods, obviously, you're going to make an indicator more responsive to price changes, but it can also give false signals. Your levels can range anywhere from 20 to 25 for signs of a trend, 45 to 50 for extreme trend strength. It's up to you. Just look at the chart, see what makes sense to you and what you read very well. So if I use 50 as an example, you'd look for instruments that may be overextended looking for a reversal, right? Using a technical analysis approach such as a failure test, you can take advantage of the market's tendency to mean revert after a big move. The bottom line, whether it's the ADX or moving average, it doesn't matter what you're trading with. Ensure you have a written trading plan that includes, for the ADX, the reading that you need, as well as any risk management so you can survive the run of losing trades that we all get. If you like this video, started to make you think a little bit more about your own trading strategy, hit like. Any questions or comments, pop them below. Thanks for watching.